In this video, we're going to look at how you can become more profitable as a trader by understanding fundamental monetary policy divergence. Let's jump straight into this one. Guys, let's break down what exactly is fundamental monetary policy divergence. Now, before we start diving into this and looking at the explanation and then tying it in with the charts technically, and you will become more profitable if you get your head around this, which is pretty easy to do so. Let me just show you something firstly. Recently launched a completely new community known as Two Blokes Trading, okay? So this is a weekly podcast, but also a trading community for you to get involved in, right? You can check out the app, you can download it, right? It's also available on web app, okay? Android and iOS on Apple. Now, if you just quickly look at the web app here, ton of value going out to our community each and every day. We have different sections. So the forums is completely free for everybody to view, come in and look. Forex, stocks, crypto, indices, commodities, so on and so forth. And also in the premium. In the premium, we go into more depth, more analysis, more fundamentals, more technicals, more trade ideas, more education. You get the point. So there's a ton of value in there. And the way to get involved in that is simply all you need to do is check out our FCA regulated sponsor partner broker. Go to the broker sponsorship page and click on the get started link, fill out your details and register for a Pepperstone account. It's just a minimum of $200. It doesn't really cost you anything. And then you get access to the Two Blokes Trading once you begin trading there with Pepperstone. So really, really good offer there. Now let's jump straight into this video. What exactly is monetary policy divergence? I'm just going to put it in a nutshell for you because I don't want to go on and on and on. Monetary policy divergence. Firstly, what's monetary policy? Monetary policy is something that's set out by a central bank to try and support the economy and control inflationary levels, right? They want to maintain, economic growth and price stability, okay? They just want a sound economy. So we have such as raising interest rates or lowering interest rates. We raise interest rates in time of when inflation's too high, growth's overheating and so on and so forth. So we want to cool the economy down. When the economy's lagging a little bit and inflation's, inflation's low, so on and so forth, then we cut interest rates, try and promote spending and then bring up inflationary levels, bring up growth, so on and so forth. Right now, we're in a period of where inflation's really high globally, as I'm sure you're aware. Major central banks are starting to raise interest rates. So divergence essentially is just when one central bank is raising and the other isn't. Perhaps the other's cutting or just not doing anything, and one's raising. So we're getting this growing monetary policy divergence. So that's what we're having right now. Now, I want to show you this dollar chart, okay? What we're going to look at in this example is euro dollar. But firstly, I want to show you Dixie. Why? Okay, so Dixie, the dollar index, remember the central bank is of the dollar, the related central bank is the FOMC. Now, interestingly, before we get onto the fundamental part, look here technically, right? We had this double bottom structure, okay? We had this double bottom structure, 1, 2. At this neckline area here, in which we were pushing towards to go and break out and retest, and so did we see that. Now, what's significant is back here, you see this upside here in June? This was when the FOMC started communicating to the markets that, look, we're going to start raising interest rates now. We're sort of trying to come out of away from this pandemic period where they were cutting rates back in 2020. And look, we need to start having liftoff, essentially. Liftoff of interest rates. So they started communicating that to the markets, and the dollar started strengthen. They were one of the first, major central banks start communicating that there. So that's why we had this upside for the dollar. Markets pricing in interest rate hikes. Remember, when we're raising interest rates, it's a positive for a respective currency. Why? Again, in a nutshell, if we're raising interest rates, it's going to attract more foreign investment. If you want to invest in that economy, what currency do you need? You need that currency. You need dollars. So the demand for dollars picks up. So the dollar raises in value there. Okay, so the markets were communicating that back here in, the FOMC were communicating that back here in June 2021. So we had this nice push to the upside. Dollar started consolidating around that neckline of this W structure. Can you see that double bottom? Started consolidating, and we had that nice big breakout and retest. Now, back on my Instagram here, all the way here, I called this upside. I called it because the technicals were there. The fundamentals were there of the FOMC communicating this to the market. I was like, guys, dollar is going liftoff. I remember I had some stick for some people for calling that, but I was right, okay? So pushing to the upside. Now, let's jump over to euro dollar. Okay, we've had some really nice trades on euro. I'm just going to remove all this all these other trades, and then let's break this down. So, who is the central bank of Euro, or what central bank relates to the Euro? The ECB, European Central Bank. Now, these guys, okay, these guys have been a little bit behind the FOMC. Now, let's firstly, before we go on to the specific, let's firstly look at in June, okay, or excuse me, July, when the FOMC started communicating. Remember, the Dixie, the weighting of this, Euro is over 50% weighting, okay, so it has a massive influence. And I look back here, we had this massive head and shoulders at left shoulder, head, right shoulder. And look, you could see back in, where is it, June, look, that big sell-off, okay, that big sell-off forming that right shoulder. We're in line with the dollars rising. Remember when the FOMC communicating they're going to start raising rates. And then obviously, look, we started flirting, consolidating around that neckline area. You see that neckline area, and a big breakout to the downside. Now, and obviously, look, the trend has been south, fundamentally and technically there, because that growing divergence. Now, that divergence has picked up in time, because we saw the first hike from the Federal Reserve back in March, okay, March of this year, of 2022. They raised for the first time since 2018. That was in March, okay? As you can see here, look, March. Now, the ECB didn't start raising rates until July. So look at that big run ahead. So essentially, it's like you got Usain Bolt. Usain Bolt's fast enough, but he's got a head start. He's winning the race. And then we've got the, so Usain Bolt is the FOMC, FOMC Usain Bolt. And you've got all the other racers behind, such as the ECB. They're getting left. So they had this massive head start, the Federal Reserve. So let's go to July. Let's go to, excuse me, March 2022. And here we go. Look, FOMC action. And then consolidating and pick up pace. Selling. So, and obviously the FOMC have been raising interest rates a lot faster than the ECB. As I say, the ECB did the first rate rise that they did in more than a decade. I think I had the date written down here since 2011. Yeah, 2011. So you see that divergence. And then what was happening here, if we look technically at the structure, you can see this, it's firmly to the downside. We're printing, you know, lower highs, lower lows, lower highs, lower lows, lower highs, lower lows. You get the point. And it's just largely driven by this growing monetary policy divergence between the FOMC and the ECB, okay? And it's really nice to trade. There's so many trade ideas in here for me. I was loving life. And one most recent one, which I really capitalized on, was from up here around this 103.70 area. Boom. And a lot of that, as I say, is just listening to what the central banks are saying. And we know how aggressive the FOMC have been. And I've really capitalized on that communication to the markets and then tying that in with the technicals there. I hope that sort of makes real clear sense. Fundamentals are a massive underlying driver for the currencies that you're trading. You've got to get your head around that, okay? Guys, just as a reminder, Two Blokes Trading, do not hesitate to check out that app. There's so much value here. I want to see more of you guys in this community getting involved. I'm posting in this every day. Okay, every day. Now, there's going to be a part 2 to this video. You can head over to the Two Blokes Trading YouTube channel, right? I'm doing a part 2 and we're going to explain Swiss yen with a trade idea that I've actually pushed out to the community. And also, actually, let's go over dollar yen because there's something interesting there as well. So with some trade ideas, head over to the Two Blokes Trading YouTube channel for part 2. Don't forget, smash up the subscribe button and the like button. It means a lot to me. Stay lit, stay blessed, and let's get it.